Hi everyone. I know it's been a while, but let's go over my overall portfolio. Of course, we'll go over some of the charts that I'm looking at just to help predict some of the next couple days or a couple weeks of price action in the markets for you traders out there. And I'll go over each of my investing accounts, starting with Worthy Bonds, Groundfloor, Fundrise, M1 Finance, my TSP account, and then my trading accounts at the end. Definitely like and subscribe if you get any value out of this video. It really helps the channel and gets my message out to more people. And make sure you comment down below if you have any questions. Welcome to the Portfolio Bulletin. Let's get started. Looking at the NASDAQ first, you can see it definitely does not look great. We had a nice solid run all the way up here into the middle of August, and since then it's been basically straight off a cliff. Since Jay Powell said he thinks we might have a harder landing, and you can also see this was right off of the daily resistance from here in December of 21, April of 22, and then right here again, August of 22, and we're now moving back down lower. This definitely does not look good right now. You can see there was a small bounce here on the 1st of September, but it looks like we're going lower, at least down to 285 and possibly taking out these lows here from June or July. Definitely on the defense right now. And moving over here to the 4-hour chart, you can see this looks even steeper, really moving to the downside. Slight retest at resistance point, continued lower, retest, continuing lower. Next support is somewhere around 285, but really 265 is the next level of support that's strong, or the previous lows here at somewhere around 269 or 268. That 265 level is the lows here from September of 22, or the highs here from July of 20. So this area does have support looking at as that next strongest level of support down here. Moving over here to Lululemon, I do highlight this one just because it's done so much better than the rest of the markets. You can see the lows here were at 260. It's all the way up at 315 right now after earnings. Bounced pretty strongly off of this support level here, which was right at the same level as this here at 290. It did have a big jump higher and then came down quite a bit, touched that 328 level for just a second, hitting that resistance point. But again, you can see the structure here pretty strong compared to the NASDAQ. Next, we have XOP, or oil and gas. You can see big bullish structure here still. It did break down a little bit, testing the lows here at 110 or so, which was the highs here in October of 21 and again here in February of 22. That support held, and we are starting a little bit more of a bullish structure once again. Be aware that this resistance is pretty strong. You can see we've already bounced off at one time here, right in that 152 level, but there's a little bit of upside until we retest that resistance, and it could be a little bit further up this time, maybe 160 if we get a catalyst of some kind. Be aware that the momentum is a little bit to the downside here on the daily chart, so you might want to wait for this to at least look like a weaker red candle, something like this, where we push back up into some stronger green action. Otherwise, this does look a little bit bearish despite the technical structure. Next up, let's talk about the VIX. The VIX has been on this ascending pattern here for a little bit. Then we did get a breakdown below those lows, which was that big move higher that we saw across the major indices. Since then, we've pushed back above that support line, and we did retest it, it looks like, and it seems like we're going to go higher, at least over the short term. So again, expecting some more volatility across the major indices in the short term based on what the VIX is doing here right now. Next up, we have the NASDAQ divided by the S&P 500. You can see the S&Ps have been pretty dominant here recently. We did have a big move higher for tech stocks, which was really good for me. But you can see here, growth is starting to fade again, where the S&Ps are starting to do a little better. So if you are going to trade on the bullish side, seems like the S&Ps are a little bit better spot, and growth in tech is not the place to be right now. We have a couple points lower for where we would find some support potentially, but you can see this overall structure is very bearish for growth and for tech. Next up, we have the 7 to 10 year bonds. Definitely very bearish here. Of course, we see inflation continuing. Seems to have slowed down a little bit, but inflation is still going on, and you can see bonds have responded to that. We haven't quite taken out those lows yet here from June, but this is definitely still a bear trend. And as bonds go lower, of course, the interest rates go higher, and as interest rates go higher, that is not so good for stocks. Last but not least here for charts, we have the dollar, and you can see it's very bullish right now. So as the dollar gets stronger, pretty much every other asset is going to get weaker. Bonds get weaker, stocks get weaker, and people are moving over into cash. This is basically parabolic right now. You could probably argue that this is going to top especially with the velocity of this move. At some point, this is the weekly chart, so you can see huge move here over the past year or so, around 22 or 23%. Big move. And as this continues, the dollar gets stronger, and basically every other asset is going to get weaker. Otherwise, moving over to my investments, you can see worthy bonds, not much has changed. I've basically been leaving this alone, letting it build interest. It's not keeping up with inflation, but it's a little bit better than a savings account, and this is capital that I like to keep on the side, just for any kind of emergency situations. Next up, we have Groundfloor. Continuing to add to this, you can see it's up over 10,000 now, which was one of my goals for this year. I think it might go up to maybe 12,000 this year based on my current rate of investment, but still no losses, continuing to get a little bit over 10% returns. So this has been a great investment, still beating inflation. Of course, this is a little bit less liquid than everything else. You do have to wait for these notes to pay back, but once they pay back, you can withdraw that money as you see fit or to reinvest it like I've been doing. Currently, my investments are almost exclusively in C notes, high percentage of C notes just based on the availability as well as the total returns. Some in B, some in D and E, but again, this 10 to 11% seems to be my sweet spot here in C notes. Moving over here to Fundrise, you can see there was a pretty big jump, just about $5,000 or so, and that's because I invested in their innovation fund. They did offer their innovation fund to me. I know it wasn't available to everyone, but if you did get an opportunity, I do think it will be a pretty good investment over the long term, and it'll be interesting to keep track of that. I will make a more detailed video on the innovation fund and what I think that's going to look like over the long term, but so far, doing pretty good. You can see Q3 has been fairly tame so far, a couple of higher percentages here, 1.2%, 2% here in growth. You can see they're merging a bunch of REITs, which has already happened, so 2% here, and 0.6% here. Not a bad return, 0.7% already this quarter, and a total weighted average of 6.6%. Then if you go over here to portfolio, you can see how they're separating this out with the innovation fund, $5,000, somewhere around 8% of this overall portfolio. Moving over here to M1 Finance, you can see it's not doing well with everything else. You can see it's down a little bit over 3.5% or almost $700 minus dividends. This account was all the way up to $19,300 at the highs here recently, and then it's back down to under $18,000. So that doesn't feel great, but of course, this is a long-term buy and hold portfolio. Has a lot of real estate, which isn't doing great right now. IDV, which is down the most out of the bunch. This is international. Select dividends. This was one of my best performers early on, so overall, it's probably still one of the better performers. Let's look at the long term here. You can see real estate not doing that great. IDV up 20%. Vanguard dividend appreciation 35% at the highest. And then everything else is kind of in between. Dividend growth 26%. Bonds down a little bit. Some individual stocks down a little bit. And then Vanguard growth, which is down the most. Moving over here to TSP, you can see the new format. Looks pretty nice, a little bit cleaner, gives you by percentage. You can see my current mix, and I'm investing in stocks the most right now because I think stocks are going to continue lower, and I do want to buy them as they go lower in this long-term portfolio. You can see some money in government bonds, some money in regular bonds, but the vast majority of this money is in stocks, and I'm buying a little bit more of the S&P 500 than I am the overall market index, and that's what I think makes the most sense right now as stocks continue lower. Moving over here to my Tastyworks account or my options trading account, you can see I have a small position here on IWM and my IRA and a small position here in the NASDAQ. Small profit here, small profit on the calls here too. Overall, a little bit over 85,000 in these two accounts and not doing too terrible on the year. Down 700 in my IRA and almost 16,000 in this individual account, which still by percentage is doing much better than the NASDAQ, which I use for my baseline in my larger account. Finishing up here with my monthly tracker, you can see continue to add to stocks and trading. Stock went up a little bit more because I'm including my innovation fund investment in stock, actually, even though it's on a real estate platform. I know that money's going to be invested in stocks, so that's where I'm including that. Green here is my trading, continues to do really well. It did actually grow faster than my stock portfolio if you don't include that innovation fund investment. And then REITs continue to tick upwards with my regular monthly investments. And then everything else is either flat or trending down. You can see my cash went down quite a bit because I did have to invest a lot of money into that innovation fund compared to the amount of cash that I keep on hand. Overall, pretty good movement from July into September. I was unable to do a monthly update for August, so it looks a little bit better than it would normally with a 7% increase over the 2 months, but 3.5% per month on average is pretty good. And of course, we did see a little bit of a rally in stocks from July to where we are right now in September. Let me know down in the comment section what you think of stocks or any of these charts going forward, or if there's anything you want me to talk about in future videos, definitely put that down there as well. Definitely like and subscribe if you got any value out of this. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.